So today I want to have a look at mapping the distribution of daily high and low data on the Nasdaq markets. I've done this for the last 3 years using hourly data. The reason I did this, I was actually listening to a podcast recently where someone suggested it as a trading training exercise to go through and by hand to mark out the highs and lows of each given day for 3 months of data. Now, I'm sure there is a lot of value and insight in doing that. However, I thought it seems like the sort of thing that could be done much more easily with a bit of Python code, and the analysis could maybe get a bit more in depth if we were able to save some time in the data collection side of things. So I thought I'd give that a go, and this is what we've got so far. So here, looking at bullish days, the high and low distribution, the lows being the red and the highs being the green, we can see here that we've got a big spike for the Asian session. And then slowly comes down, and then lows of the day are more likely to be formed during 3, 4 and 5, the London session here. And then there's a big spike at 9 a.m. when the New York AM session opens. As for the highs of the day, we can see here that there's a big spike around 10 o'clock, the second half of the New York AM session, and then again a secondary spike at 3 o'clock here for the New York PM. So to me, this suggests that the lows are more likely to be formed at the sort of start of one of the sessions, specifically either the Asian session or the New York session here. The spike at 6 o'clock is slightly less significant in that any price that continues to move up constantly will be at its lowest at the start of the day. So I don't expect to see as many kind of specific sweeps down to hit a low at 6 p.m. But if there is a continuation that continues on for a couple of days, that's when we'll see those lows formed directly at the start of the day. Conversely, with the 4 p.m. highs, those are going to be moves that haven't finished before the end of the day there. But I do think that this spike here around 9 a.m. is quite significant, because we've got showing here that the lows and the highs of the day are quite likely to be formed within that hour range. That hour range of 9 till 10 o'clock is going to be quite a volatile hour of the day. So we can have a look at the same data here then for bear days, and we see essentially an inversing of the graph, with the highs being formed at the start of the day during the Asian, London and New York AM session, and the lows being formed during the PM session. Now, the structure is slightly less rigid here than it is for the bullish days, and I tend to find actually when I'm doing this kind of stuff that the bearish days tend to be a little bit less structured. They tend to deliver slightly less structured price action in terms of the distribution of highs and lows, and actually the bullish days tend to be a bit neater. So next, I wanted to have a look at some conditional probabilities. I wanted to have a look at, if New York opens below the daily open, how does that affect our distribution for highs and lows? And we can see here actually for a bullish day, where New York opens below the daily open, we can see almost an ignorance of that Asian and London session, and actually just a massive spike here for the New York AM and the New York PM session, which is to be expected, I guess. If we've got a New York session that has been brought below the daily open, but we're then moving up on the day, we can see that it's more likely that the low is going to be created during that time, and it's less likely it's going to be created. In fact, it's impossible, in fact, that the daily low would be created here at 6 p.m. because if it were to be, the New York couldn't then come below that point in order to meet this condition. So that's why we've got 0 red bar here. Now, as for a bearish day, we can see here the structure is still present, but it's ever so slightly less defined. Now, the reason that this is slightly messier, as we'll see when we look at other data in the future, is that when the New York session does open below the daily open, there is a slightly higher than average probability that we have a bullish day from then on. Therefore, this kind of New York open below the daily open is a condition that primes itself for a bullish day. Therefore, that's why and that is, I believe, why I tend to see on, and that is, I believe, why we tend to see on days that have sort of bullish precursor conditions tend to have better structure for bull days and worse structure for bear days, and conversely, the opposite is also true. Now, why look at these conditions? The reason for me is because if I'm able to find a condition that gives me a much more defined structure of high and low distribution throughout the day, it means that if I see that condition being met, I'll have a much higher probability of knowing when the low or the high of the day is going to be created. And for that reason, I wanted to compare the bull day New York Open below the daily open condition to just the unconditional bull day data. And if we see here, actually with this added constraint, we have a much more rigorous structure that does ignore the Asian and London session much more closely than otherwise. We can also look at when the New York session opens above the daily open, and this is kind of the opposite case of what we had before, which is why we can see here there's slightly less structure to the bullish day distribution, and the bearish day distribution shows now that really big spike at New York AM and New York PM. So that's all I wanted to show today. I have been doing a load of other analysis with the same data set, and I'll put videos up on that soon. I wanted to start doing it on YouTube because I think it's more conducive to discussion than posting on Reddit or anything else would be. And what I really want for this is to bounce ideas off people, to kind of be able to do any analysis other people might want to do but maybe don't have the means to do so, or just to show how easy all this is, because it was mostly done through the use of ChatGPT, some very basic Python code, and a lot of beating my head against a Google Sheets document. So yeah, I just wanted to put this out there and see if anyone else has any insight or any ideas of other things that I could have a look at, and I'm sure I'll be back very soon with some of the other stuff that I find while I've been doing all this.